Hello again and welcome to another stock market, financial markets for that matter, roundup. I'm doing this midweek. It's 11th of January 2023. So as always, we'll kick off with the major benchmark index, the S&P 500 with the big picture weekly chart. And let's see if that trend line that we've been tracking, hovering over it here, everything here is breaking out or not. So there it is. That's what's been keeping it down. And but as is typical in a downtrend, several assaults on this line. We did get one there that was surprisingly, it didn't really follow through, but looks like we're having another attempt right now. And as we'll see in a second, things could be turning around, could. So let's just have a look. Let's zoom in here to the daily chart and see what's going on. So here is a nice bit of support and resistance going on right here. So you can see here the S&P got a little shelf going on here, but then traders, as it poked its head above this all important 200-day moving average, sold off, and then it broke. As you can see, the support broke there, and sure enough, down it goes. Very predictable. So it had this so then this old support becomes new resistance, which is what we had here. And it looked like it was just poking its head above. You can see the sellers sold off there the other day on Monday. But then Tuesday and now today looks like there's a comeback. And it looks like it's broken through this old resistance. So another assault on the 200-day looks in order here. I'm not seeing any other signs than the charts I'm looking at to see if this market's still got room to run. It can do it. The VIX volatility index is fairly low, so looking good. And I haven't shown you this before, but I know it's a little bit hokey, but I do always keep an eye on the moon cycle as well. Remember, this is humans. This is emotional, and the chart is really a measure of human emotions. And the full moon, it's just been well documented for a long time, does affect us. And so what we're looking for is that we just keep in the back of, it's not something to go by, but I always keep in the back of mind here, is it a waxing or waning moon? And it's just entering into a waning phase now, which could go against it. But anyway, let's look around. The Dow has been the one that's trying to lead this whole thing out of the mire, and it's broken above this resistance here, and this double bottom. That was real classic there, and it's really doing a good job of getting back above. It stayed above the 40-week. This 40-week starts to turn around, then that would be good. But all the indexes, the major ones, have to be in agreement with each other, and that is why we didn't have, when the Dow was already pulling out of this before, can't do it alone. It needs the S&P, and here's the NASDAQ, which is the worst of them all. Much more of an aggressive downtrend here. This is the furthest one away from making a comeback, you can see. But that's why a lot of these tech stocks have been beaten down, and some of them are crazy low prices now. And this is a crucial line for the NASDAQ right here, about 10,350, something like that. It must stay above that level. That's a key support level there, and see if it can finally turn around. Another thing to bear in mind is the presidential election cycle. We're in the third year of a term, and that typically means things kind of should go well. Again, these are all we do is we can look at the odds, but might be favoring. This could be the year we finally pull ourselves out of it a little bit. Remember, the stock market and the economy are not the same thing. I know it sounds strange, and obviously they're correlated, but the stock market can absolutely do its own thing. That's not to say there isn't a recession danger. So here's the small companies, which is the kind of bellwether, the canary in the coal mine, as it were. And this is getting back above that 200-day, that 40-week here we see, which is the same thing, of course. So there is a light of hope here. We're not going to start plunging in just yet, though. We need to see some better action than that. Here is the dollar for all you Forex traders here. And it obviously is related to stocks. When there's a high risk or stocks are going down, people tend to pile into the dollar. But the dollar is coming down. So that's the uptrend, that aggressive, crazy uptrend for dollar was definitely broken way back. But now we're starting to see a real downtrend in play there. For any Forex trades, which all other currencies, of course, are pegged against the dollar. Downtrend for the dollar. The bonds, this is why the Fed keeps raising rates, the TLT. Unless this stock chart starts pulling its socks up, then as it's trying to, you can see it looks like it could be finally hitting bottom, getting back up there. They're not trying to fight inflation, they're just trying to get people to buy their bonds, and that's why they keep raising rates, and we will do quite aggressively until this chart turns around. Let's look at copper. Copper has been a turnaround. Dr. Copper, which is seen as a bellwether of the global economy because it's used in so many things. And when I reported last time, or the time before that, I think, you could see downtrend in play here. That's the 40-week moving average. And what typically happens here is something hits something against that trend and bounces down further. But what happened here is copper defied that. Copper broke above the 40-week and is pushing higher. And something you can do sometimes is you can look at the RSI here. That in itself is a powerful prediction tool, and you can see it doesn't just apply to copper, it applies to anything. There's a powerful uptrend in play now for copper as it's broken above the 40-week. Doesn't matter if you trade copper or you don't. This is, as I say, an important metric people look at for the global economy. So that is very promising.